Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Alan Durant, the new chair of the Investment Committee for the Wealth Club Portfolio Service. I first met Alan in 1999 when I joined Hargreaves Lansdown as a graduate, and he was the investment director there. He left Hargreaves Lansdown well before me and went on to Scandia, where he founded their Best Ideas range of funds. If you've been investing for a long time like me, you'll probably have heard of them. After that, he went to the Gulf, where he was Chief Investment Officer at a major bank there. In 2013, he co-founded Harwood Wealth Management, which later went on to float on AIM and was subsequently sold to the Carlyle Group. In other words, he's been managing money or managing teams that manage money for more than 30 years. We've never lost touch, and 2 years into the Wealth Club Portfolio Service, I asked him whether he would chair our investment committee, and I'm delighted that he's accepted. Today we're here to discuss the service, what he thinks of it, and what he's found out so far. So Alan, in your professional opinion, what's attracted you to the Wealth Club Portfolio Service?
Well, firstly, from a personal perspective, I'm really excited about working with you again. So I know it's taken us nearly a quarter of a century to be working together again, but we have both been rather busy in the meantime. From my perspective, I've always liked the way that you do business, and it's clear in the culture of this business. We both grew up at Hargreaves Lansdown, and certainly back in the day where we were first together, there was a real focus on the importance of delivering a great service at a great price to people. And as I've gone through business, I don't think there's really any substitute for that. That whatever else you do is really just marketing, isn't it? If at the heart of it, you haven't got something which is delivering real value to the end customer, then nothing else really matters. And I think that's what you've built here, is something that delivers really great service, great performance to clients. The other thing I really like is the way that you focus on bringing in alternative assets to clients. And a lot of these things, whether it be private equity, whether it be private credit, these sort of things historically have only been available to institutional investors, to family offices, and making these more broadly available, I think, is a really good thing. And I suppose finally, I think speaking with a lot of friends and family, they've created not a portfolio with their own assets, but more of a sort of comet trail of good ideas that they've got over time. And typically those are things that they've bought at the top of the market. And what they've got is not really a portfolio, it's more of a collection. And I think there's a very big need for those to be tidied up. And I think this portfolio service here is the ideal thing for it.
Thank you, Alan. If someone was considering investing, what would you say to them with your 35 years of experience, what they should be looking for?
So if I had to sum it up in one word, I'd say balance. Because when friends and family talk to me about investing, they always focus on, in my view, the wrong end of the portfolio. What they focus on is individual funds. So they'll say to me, what about this Fidelity fund, that Schroeder fund? Should I be buying this? Should I be selling that? And an analogy I often use there is thinking about gardening. That if you try and build a garden, one plant, one flower at a time, it's never going to have balance. So if you were to ask a gardener how to build one, they'd say, well, you want something that is in colour, in bloom throughout the whole season. And when you think about looking at one individual fund, it is a bit like in spring, still just about in spring here, saying, well, the daffodils are going really well and the crocuses have been great, but those chrysanthemums, they've done nothing at all. Whereas a professional gardener would say to you, well, don't worry about that because the chrysanthemums are going to be looking great later in the year when the daffodils are doing nothing. It's very much the same with building a portfolio. With a lot of private clients, they'll look at their portfolio now and again and they'll say, well, that particular holding hasn't done very well, I think I'll sell it and replace it with something that's doing much better, which is a bit like, in some ways, going back to my gardening analogy, it's a bit like saying, well, let's dig up all the chrysanthemums and plant more daffodils, which would obviously be the wrong thing to do if you wanted that year-round colour. And when you think about a portfolio, at the moment, again, we're in spring 2026, there's a temptation to say, well, let's sell everything and put it all into technology. So all of the things which aren't doing very well at the moment, so anything that's invested into quality shares, let's sell all of that and let's just go and buy some more Nvidia and Microsoft, which would be the wrong thing to do. So from my perspective, making sure you've got a balanced portfolio is by far the most important thing, but also it's the most difficult thing to do. So for your average investor, when they're looking at the holdings in their portfolio, they'll know what is doing well, but they won't know why things are doing well or doing badly. So it could be that they look at a fund that's in the fourth quartile that's done very, very poorly, and that could be because the fund manager themselves are a poor one that they've gone off the boil, or it could be they're doing a great job, but they're just operating in a part of the market that isn't doing very well at the moment. So back to my gardening analogy, if you ask a gardener, well, what should I do with that? They can tell you, is it a weed that there's no point watering it, it's never going to flower, or is it something where you just need to leave it there because it'll be great at a different time?
Fantastic, that's a great analogy. And what, in your opinion, how does our service stand out compared with others you've seen or been involved with?
Sure. Well, I think there are a few ways. The first is the focus on keeping costs down. Now, that may not be the most exciting part of investment management, but it is really important, particularly over the long term. Saving 0.5%, 1% every year for 10, 20, 30 years can make a really big difference to the pot at the end. But it's also important to think about the way that you're saving costs. And in our industry, there's a movement at the moment towards passive fund management. And really people are picking sides. Are you an active or a passive investor? And it's got to the point where some people, it's almost like Catholic versus Protestant or United versus City. You have to pick a side, which I think is wrong, because there is a place for both active and passive investment management. There are some areas where you have to have active, i.e. human fund management, so areas such as infrastructure, private equity, property, but also things like smaller companies, some of the more exotic bond markets. You have to have a human involved. But there's other areas when you think about government bonds, when you think about blue chip equities, where actually keeping the cost down by using passive is probably the best thing to do. And what Jonathan and the team have done here really, really well, I think, is balance that. So where we can cut costs, do so, but where we don't need to, or when we can get better value by using an active fund manager, then spend the money and get better fund management. So I think that's a really smart thing they've done. The other thing is, when you think about investment management, a lot of people will think about a fund manager taking a really big hero call. And that's part of the excitement that some people see in fund management. Problem with that excitement, taking that big hero call and deciding I'm going to move from bonds into equities, or Japan into the US, or growth into value, large into small, those sorts of bets, they do bring a lot of risk with them as well. And you really don't need to, because over the long term, the assets that we invest into are probably naturally going to rise anyway. If you invest into a balanced portfolio of equities and bonds and cash, private equity, infrastructure, then over time, just the dividends, the rent, the interest, the economic growth will give you a good return. So really, the thing to do is to keep your mistakes small, don't have these hero calls, and really try and add a little bit of value on a consistent basis through active investment management. So that to me is something I've always believed in, and it's something I've seen here.
So what prompted you to invest yourself?
Well, I've always had a very simple rule, and that is that the chef should eat their own cooking. It's something I've insisted on wherever I've been as an investment manager. It's also something I like to see in anything I invest into. If I'm investing into someone's fund, I want to know that they are aligned. I want to know that they believe in what they're doing as much as they're asking me to believe in it. So yeah, that's a very important thing for me. If I'm going to have an influence in this investment committee, then absolutely I should share in the ups and downs.
So you've been working with the team for a couple of months. What do you think of them?
Great. Ultimately, anything in business comes down to people. And I think what you've built here, not just in the investment team, but in the broader business, you've got a great culture. You've got people who are supporting each other, challenging each other. And really, that is the key to success, whatever you're trying to do. So you've got people here who've got passion for what they do. Investment management isn't a 9-to-5 job. It's not the sort of thing where you can hang your overalls up when the hooter goes at the end of the day and that's the end of the job. You need to be intellectually curious so that things that you hear, things that you read outside of work are constantly giving you thoughts, giving you, how may that challenge some of the things I've got in my existing portfolio. So that intellectual curiosity, the passion for doing well, the striving to be better is something that you've got here. But the other thing is humility, which is a very underrated, in my perspective, a very underrated aspect of investment management. Clearly, as smart people who read a lot, who know a lot about what we're doing, it is tempting to think that we know everything, but we're operating in an environment that is fast moving, never more so than at the moment. And it's important that when there is a change in the broader economy, the broader politics, that we're also happy to say, okay, I was wrong. I need to change my view because the world around me has changed its view. And one thing I've seen in the investment committees so far is that when someone puts a view forward, then it's respected, and it's the final decision is taken by the smartest voice rather than just the loudest voice in the room. And that's something which, again, to me, is the hallmark of a successful investment committee.
Well, thank you again for your kind comments about Wealth Club and the team. Are there any final comments you'd like to leave with us?
Sure. Well, I'm not going to leave any predictions because of all the times in investment markets to be making predictions. I think now is probably the most opaque I've ever seen. But I think what that does is when I think about the actions that private investors should be taking now, there's a real temptation at the moment to be whipsawed because of the dynamic environment that we're in. Just following what's going on Truth Social could cause you to make 3 or 4 adjustments to your portfolio every day. And you can end up doing the hokey cokey with your portfolio in terms of being bullish and bearish based on what we're reading. And inevitably, that will be something of a mistake. So to me, I wouldn't try to follow the news every day and react to it. I think going back to what I said a little earlier, this is the time more than ever to have a balanced portfolio where there'll be some things that are doing really, really well. There'll be other things which are maybe not doing so well at the moment, but they'll be the things that will take over the leadership when some of the things that are doing well at the moment are taking a pause for breath. So really, a balanced portfolio is more important than ever. But also, I think this is a great time to give your portfolio a bit of a tidy up. So if you have got that portfolio which has got a kaleidoscope of different holdings that were great ideas once, but you're not sure about them now, I think this is a great time to say, well, how do I get that portfolio into a shape that will meet my needs for the next 20, 30 years. And particularly if you're not following those individual holdings very closely, I think having them under the stewardship of someone who will follow them all day, every day, I think now is probably a really good time to do it.
And I couldn't agree more. We are delighted to have you here as our investment chair, and thank you very much.
Thank you.